Welcome, everyone. Thank you for joining us for this webcast. Support employees through financial wellness and benefit options, sponsored by Rapid. This webcast has been pre-approved for HRCI and SHRM credit. Please be sure to attend the complete webcast in order to receive your credits. If you have any questions during the webcast, click on the Q&A tab in your webinar controls and type them there. A new tab will open in your browser with Webcast Survey. Please be sure to complete it as soon as the webcast is ended. It is now my pleasure to turn it over to Rapid for their presentation.
Thank you, Hester. Really appreciate being here today. And we are going to walk you through some interesting information, we hope. My name is Brian Slowick. I am SVP of Wage and Corporate Disbursements at Rapid PayCard or within Rapid, and I'm a Rapid PayCard co-founder. I'm speaking to you today from Tampa, Florida, and I'm also here along with Frank Dombrowski. He is CEO of FlexWage. Frank, would you like to introduce yourself real quick?
You bet, Brian. Thanks, and thanks everyone for joining the webcast. I'm Frank Dombrowski. As Brian mentioned, I'm founder and CEO of FlexWage, and FlexWage is the earned wage access partner. We hold the patent, and we'll get into our history in a bit. But we're partnered with Rapid for 3 years now, Brian, and we provide the EWA engine behind the Rapid solution.
Thank you so much, Frank. And let's get into what we're going to talk about today. We are going to talk about what is a low to moderate income employee, which will be referenced as LMI. You'll have to excuse me, I'm an anti-acronym guy, but there are some acronyms within our industry that we have to use. And earned wage access, of course, which will be referenced as EWA and how it relates to PayCard. Second, we will have, will this have an impact on hiring and retention, this being earned wage access? And why will your employees use the benefit of earned wage access? And what about regulation as it relates to earned wage access? So let's go ahead and step into what is LMI. Who is the LMI, which is a paycheck to paycheck audience? That's low to moderate income. And we at Green Dot did some collective research into this particular group of individuals in order to get their feelings and pain points behind how they manage their money. And we're going to do the tie-in into why this is important for earned wage access and to you as an HR professional, and also to the whole HR suite of services, whether that includes payroll or it does not. But your folks have a particular need as to how to manage their money. And this particular research was focused on the low to moderate income, but we will talk later about how earned wage access works for folks that are multiple six-figure incomes and how it's impacting today's hiring and retention. The audience of this particular survey was 1,103 respondents. They were U.S. consumers with annual household incomes of $75,000 or less, and their age was between 18 and 54. So based upon my age, they were all babies. Self-described as living paycheck to paycheck, and primarily manage their current bank account on a website or an app. And that is important to know in today's world, especially post-COVID, because so many branches of banks have either closed, gone out of business, or have moved all of their services to this wonderful mobile device, which is where everything needs to be as we go forward. And that is the focus of the things that we are going to talk about today. So the paycheck to paycheck consumer audience is significant. 60% of US consumers live paycheck to paycheck. 74% of those that are living paycheck to paycheck have less than $50,000 annual household income while they're living that paycheck to paycheck lifestyle. Some of that is generational. As you remember or may know, when you're first starting in your career, you're not making as much as you are later in your career. And that pressure is typically higher with the newer generations in the workforce. 36% of the low to moderate income consumers don't see paycheck to paycheck living changing anytime soon. And 16% say that paycheck to paycheck living is normal and will remain normal. And considerably stressed out about their money is what also many of them say, with 70% of the audience saying that they are stressed, concerned, worried when asked to describe their financial situation. 64% say they always or regularly think about the money they have to pay bills. 60% say that they would prefer to think less about the money and how they're going to pay their bills today. So that is a common thread that we are going to address throughout this whole presentation, is how you as a payroll/HR professional can assist with your employees taking some of that burden away, taking some of that stress out of their daily work life. And we want to talk about how those employees feel personally and how they are impacted. So I'm going to go ahead and play a video where you can hear directly from the individuals as to what they are experiencing and what they are feeling. So let's go ahead and get this started.
Stressed, anxious, always thinking of the next thing, always wanting it to be the end of the month so I get my paycheck.
Well, because currently I'm unemployed and I'm just trying to make ends meet. I don't have a lot of money. I mean, I make enough money to get by, but it's, doing surveys and stuff like this, but it's tough to do, I don't have a comfortable money situation at the moment.
Because we don't really have any money to save. And all the bills just barely get paid, and there's not really anything left over.
Stressed, like constantly, determined to improve it and to make it better because of my stress. I'm the type of person who acts on stress and anxiety by being proactive with changes and trying to fix my situation.
Money is pretty much constantly on my mind. I always have to think of, if I'm grocery shopping, what items I can afford. I have to look for discounts, and I have to go without certain items that may be a little more expensive or extra ingredients. I have to keep meals simple. I have to be careful about how much I travel, because in order to not spend too much on gas, so I can kind of plan my routes accordingly. So yes, the money is constantly on my mind, and I would rather spend less time thinking about it. It would be a lot more relaxing.
Money is on my mind a lot because, of course, it's needed to live. I would like to not think about it so much and be more financially stable, financially at peace, because I feel like it really does overwhelm me, and the stress and anxiety of everything, just making sure that we have a roof over our heads and holidays and things like that, it can get stressful. So I would like to think about it less.
I would say probably every day. I worry a lot about money, even if I have money saved up, because I never know what's going to happen. Just like with the prices are getting outrageous with things like with heating oil. It's hard to save money for it when it costs so much a gallon. And I just actually filled up our oil tank yesterday, and for 200 gallons it was $1,300. And normally it only costs $500 or $600. So with stuff like that doubling, it's hard not to think about money and to think about where am I going to get it instead of putting it on a credit card.
Well, it's on my mind pretty much constantly, and I would prefer to spend less time thinking about it. If I had more of it, that would probably make me think less of it. So then that way I wouldn't have to see where I'm going to pull money from where, or how I'm going to come up with the money for a certain bill. So that, or what arrangement I'm going to need to make with what company. So I would definitely prefer to spend less time thinking about it, and because it's stressful.
So, Frank, do you have any comments related to that particular input of the slides, or of the video?
Yeah, I mean, it's sobering, and we've been working in this market for over 10 years. So, and the reason we got back in it is to exactly help, that consumer base have a little bit more peace of mind in their financial life. But we've got a long way to go. There's a massive problem out there, and we've got a long way to go to help those folks get to a better spot.
Thank you. I couldn't agree more. And the theme that you're constantly hearing about that is how can I pay my bills on time? And that's part of what we're going to be discussing here with earned wage access. But it is important to understand that the audience, your employees, especially in this economy, where the one that really hit home with me, Frank, was the heating oil young lady that spoke of that it normally costs $500 to $600 to fill up the heating oil tank, and this year it costs $1,300, and that is one that just you're totally at the mercy of the market. I remember when I lived in Pennsylvania and I had heating oil, and yes, I would get it filled up over the year, and oftentimes the filling occurred in the summer, and they would try to balance out the company would try to balance out the cost because I'd sign up for that particular plan. But when it went up that significantly, it was a burden to handle those payments, and sometimes that my paycheck did not match up with the bill cycle related to the due date on the oil payment. So back to what we've learned in the survey that we at Green Dot conducted, which is 61% are talking about always playing catch up with their expenses. And a lot of times that is that misalignment that we're going to address throughout the rest of this presentation. And 52% talk about paying my bills on time is difficult. Same thing. Part of what can contribute to that is misalignment of bill date to pay date. 60% establish financial goals either week to week or month to month, and 50% say saving money to prepare for the unexpected rather than long-term investing is critical. So part of what we want to address in this particular solution of earned wage access and pay card combined is that it is important that you have a product that can help with savings and also help with financial education. Frank, can you talk about how we collectively really address financial wellness and why that has importance to this audience?
Yeah, we really look at a financial foundation as being a series of steps, getting people from where they are today, living paycheck to paycheck, having a difficult time managing bills and juggling how to, what to pay when, to try to avoid late fees and overdraft and all the other, very expensive and very stressful solutions that were previously in their reach. So we really view earned wage access as the first step, kind of helping these individuals get to the water line, keep their head above water. So every time there's a bump in the road, like heating oil going up 100% versus what it was the year before, they don't get piled on with a bunch of fees and more stress. It's just really that simple. If we can give them a lifeline that helps them stay at the water level, once they feel comfortable and they have a breath of fresh air, they're much more open then to looking at the forward-looking budgeting, planning. Do I have goals for financial? Do I want to save up for a vacation or a car or a house? Right. So if you're constantly on the treadmill, though, and getting pushed underwater, it's really hard to look forward. So we really, that's how we view earned wage access, as being that stepping stone to help them stay at water level, clear their eyes, clear their head, and start looking forward and planning. And then we are in a position where they're very receptive to a next step in financial wellness, some budgeting and some planning. And that's why we have the tools then that help them do that once we've earned their trust and kind of given them that breath of fresh air.
I couldn't agree more. And 72% agree that learning to manage their money better is important. And that is why, again, holding up the mobile device it's critical that all of these tools are available in one particular app, and that you have the tools available to the user right here. This is their bank branch. This is the future of their financial wellness. And we within the collective app have built it all to be together, so that you have the savings account, which is interest bearing, the payment tool, which may be pay card, the financial wellness that includes coaching for learning to manage that money better, all built in one particular app, so that those resources are available to the user. And 75% believe that saving a little money at a time is worth it. And that's what we're trying to bring together, is those pennies add up. And one of the other benefits that gets wrapped in is things such as cashback rewards. We have learned that this particular group of the LMI, the low to middle income worker, can end up getting almost a week's worth of pay back if they're actively using cashback rewards, which means they simply accept the offer within the app and then go shop, do what they normally do. And oftentimes that can bring back somewhere between, if their weekly pay net is, say, $500 to $900, they can oftentimes receive that back in a year. So those types of savings can also reduce the burden. The critical factor is bringing that all together so that they can take advantage of the help that they desire. As you can see on the slide, 32% of the respondents admit that they could use help managing their money. Well, wouldn't that be beneficial for them to have the tool that wraps all of these features together, and that they can simply click on financial wellness, sign up for an appointment to speak to a direct coach, and take advantage of that coaching and that financial wellness with it. I know we get many, Frank, HR professionals that ask us, I am concerned about making the situation worse. And some of our folks within this environment of earned wage access can compound that. Do you want to just briefly hit on how that can happen?
Yeah, so the solution really needs to be crafted in a fashion that it helps protect behavior. Really, we call it putting guardrails on your program. So if you're in an environment where your employees are, more mature, have bills, have a lifestyle that they need to be conservative with their money, and they need to be logical and kind of cautious about when they would pull their money early to help them avoid bad situations like overdraft or late fees. So the system allows the employer to establish rules that will govern how frequently the employee can access their earned wages. We calculate down to the employee precisely what their net accrual is within the pay cycle by using real payroll and real time and labor data. And again, then we allow you to establish rules that will govern activity and put those guardrails in place for your employees. Now, there's another use case that emerged, over the last 5 years with more gig economy type of workers. And, I personally refer to them as kind of the Venmo mentality. And, they're generally younger. They generally don't have a lot of financial responsibilities and, a car and an apartment. And they like to transact a lot. So to attract and retain those employees, giving them the ability to pull their pay down frequently with cap on the fees that they get charged, right? So we don't want to run up $20 in fees to an employee who's pulling down $40 at a time just because they like to transact a lot. So it's really the structure of the program that allows you as the employer to offer, the right flavor of earned wage access that will help your employees financially. And then also, again, with the younger workers, help you hire and retain those employees. And again, it's a little bit different use case for that type of employee, but we've designed the system to work well for both of those.
Excellent. I agree. And the main thing is simplicity for both you as the employer as well as the end user. Financial stress continues to be a major burden for not only the employees, as you've heard, but also to the employers. And how does that financial stress translate to the workforce and to your workplace? Well, we see that 11.4 hours of lost productivity per employee per week nationally, which leads to financial stress costs you as the employer more than $4 billion per week. So it is a significant problem that we all collectively, whether we're on the employer side or on the employee side, need to pay attention to. Another factor in this negative economy comes from Information at Payments, which also conducted a survey of 2203 U.S. consumers between February 27th and March 1st to examine the evolving role of credit cards and how they are being used in the marketplace. Why am I talking about credit cards when we're supposed to be talking about earned wage access or pay? Well, we have 33% share of cardholders who increased their credit card spending over the last 6 months. Eventually, you're going to bump up against that credit limit that they have. And think about it, when you were new to the workforce or you're that low to moderate income, oftentimes you don't have many credit cards to choose from. You may only have one, and it's usually a beginner that may have a very low balance. And what we're trying to do with earned wage access through you and HR and payroll is to allow for your employees to choose a very inexpensive choice to keep their bills up to time, rather than just having them go to that, that payment of the credit card that oftentimes the intent is that I will pay it at the end of the week when my pay comes in, but something happens and you don't, and all of a sudden then you do not have the money available when you have an emergency, which is really what most of those credit cards are for. We only have 55% of the consumers that have credit cards that are paying off their balance every single month and in full. So you have 45% that are carrying that revolving balance, and that can cause also more stress or not leave them room for when they have that emergency need. And that's where we want to help them with earned wage access. That revolving debt that soars can be, an ominous sign for those paycheck to paycheck employees. And you have 62% of those consumers experienced a financially distressing event in the last 3 years. That's what they want that credit card for. And what they'd like to be able to use it for is that emergency, that financial stress, financially distressing event that could happen. Many of the Gen Zs, 74% of them, and 72% of the millennials report experiencing one of those financial stressful events. I live in Florida. Frank shares sometimes living in Florida and other times living up north, but both of us are in hurricane-prone areas. And I can tell you that just simply needing to evacuate sometimes can be a financially stressful event, to where I need someplace to go. I have to unexpectedly get gas and drive out of the path of the storm and potentially stay in a hotel. Those types of emergencies, or something happens to my vehicle, in order for me to get to work, I have to take care of it. Those are the things that we'd like to keep that credit card available for, and not allow those small payments that could be as little as $25 to $40 that their pay cycle doesn't match up with their bill cycle, gets used on the credit card where they've already earned money that they can access with earned wage access. So having money at the ready can prove to be a lifeline for those grappling with those stressors, and that is one of the aspects of this wonderful benefit that you can offer to your employees, is that it can give them a lifeline. And 57% of millennial Americans say their credit scores prevented them from receiving a financial product in the past year. that's also where your earned wage access can help them keep on time with their bill cycle. One of the things that's happening in the credit marketplace today is that credit scores are being expanded to include payments of things such as your cable bill, your internet bill, your gas bill, your oil bill, those types of behaviors. And if you can keep those timely, and that's where earned wage access can help keep those timely, then the person has a better chance of qualifying for some type of credit product as they go forward. And you have also that savings becomes an issue where in 2023, millennials reported an average savings of $11,000 compared to only $7,300 in March 2022. And that's where also wrapping in the solution, the payout solution, all into one app that provides for interest-bearing savings, as well as those cashback rewards, as well as earned wage access and financial wellness all in one place becomes critical. So what is earned wage access and what is a pay card? And I want to go ahead and Frank, have you talk about, what are companies looking for and what is earned wage access?
Sure. And kind of we'll start off with pay card because it's been kind of convoluted over the last couple of years because a lot of programs offer both, and there's a very strong correlation, right, with employers who have employee groups that are unbanked, right, who need pay card, which is, it's a tremendous financial tool for those who are unbanked and, would get paper check, have to go to a check casher and so forth. It allows those employees to become a little bit more mainstream financially sound, just again, based on not having to go through so many manual processes that are also expensive. And from the employer perspective, it allows you to get to 100% electronic pay and get out of the business of delivering paper checks. Again, when you look at emergencies and other scenarios where it becomes very hard to get a paper check into a person's hand, it's precisely when they need their money the most. So it's like a double whammy when you have scenarios like hurricanes or floods or any fires out west. It's precisely when your people need their money the most, when it's hardest to deliver if you're not electronic. So really, pay card is there to provide an electronic payment solution for you as the employer and provide a very good financial management account. It's kind of entry level, just like earned wage access is to financial foundation. It's the entry level into a digital payment system for the employees. So again, very, very important for the unbanked employee, which is a subset really of then the earned wage access employees. So Brian, if you want to drop to the next page there.
Absolutely.
Thank you. So earned wage access, again, interestingly, pay card has 10 to 15% relevance to the employees, and again, those employees being unbanked in your workforce. What's really cool about earned wage access is almost 90% of, 70-some% of the workforce live paycheck to paycheck, 74% under 50,000 in income, 55% up to 75,000. So you have a huge portion of the workforce that earned wage access is relevant for. And again, we see about 90% of the activity, having a very positive impact on, from the employee's perspective, on an interest in a job, right? So the survey, the American Bankers Survey in 21, and I suspect these numbers are quite a bit higher since the market has matured significantly in the last 2 years. But again, 90% said that having earned wage access would have an impact on their interest in a job, and 50% said they'd be significantly more interested in a job that had earned wage access. So it's, and again, I'm sure those numbers are much higher as the market has matured, since this particular survey, and the prevalence of earned wage access has grown so much stronger.
And the wonderful aspect of this benefit for the employer is that it costs the employer what to offer this benefit?
There's no cost to the employer to offer the benefit, which is awesome.
So many times what will happen for those of you in HR is your C-suite may say, fix this problem. Well, what is this problem? This problem could be hiring, could be finding people that are interested to take the job, or reducing turnover. And that is the ideal spot for you in the HR profession to take advantage of earned wage access. We're going to go to our first poll question. And so the first poll question is, as you can see on the screen, is what employee health factors are impacted by paycheck to paycheck living? And you should go ahead and pick either the first one, mental health, the second one, physical health, the third, engagement and productivity, and finally the fourth, all of the above. Let's give you a minute or two to go ahead and pick your particular response. Frank, let's just talk in a general sense without, giving everybody an answer so that they can pick themselves. But, what do you see as far as the impacts?
Well, the crowd is definitely seeing the same thing that we see, which is it's obviously it's all of the above. The financial stress, any stress, and financial stress is the largest stress causer in the US, but any stress mentally manifests itself into physical challenges. So when you have that stress, constantly, like in the video, everyone in that segment is, constantly worried about money. It takes its toll on you physically. And then when that happens, you got to work and you're not, you clearly can't be all that happy when you're stressed out all the time about money. You're earning your money at your job. So your satisfaction with that job and engagement and productivity, they suffer from the ill effects of that cascading stress and physical ailments. So
you're exactly spot on. We had a few pick mental health, a few pick engagement and productivity, but yes, the proper answer is all of the above, is that it does in fact impact your mental health, your physical health, your engagement and productivity. And that is one of the things that you absolutely heard in the video that we did share. So let's go ahead and move forward if we can, and talk about, will this have an impact on hiring and retention? And I've got a little bit more information there that I think you've heard Frank and I touch on. Is we hear from you, those of you on this webinar in the HR profession, that you and your teams face big challenges. And many of you, 86% as a matter of fact, say that their biggest challenge is attracting and retaining talent in today's marketplace. It's a very odd marketplace today for hiring and retention. We have, at some points, they tell us that it's a fully employed workforce. And other points, we've got a lot of people that have taken themselves out of the workforce completely. And so you have the aspects of just getting new people involved and getting people off the sideline. You have to have enticing benefits, but you also regularly, those of you, for example, might be in, I'm just going to pick a profession, logistics. And in the world of logistics, you may have yourself and 3 other companies all based in the exact same commerce center, where you're recruiting the exact same individual, and the person can literally get a job over lunchtime by just simply crossing the commerce center for some other employer that has maybe better benefits like earned wage access. So 65% of you all say that your biggest challenge is engaging employees to keep them retained within your workforce. Having benefits that wrap together things such as financial wellness, great savings plan that give cashback rewards, payment options like earned wage access to to cover for some of that financial stress can really be a wonderful way to address your C-suite's request for you to fix the problem related to hiring and retention. So let's talk about earned wage access and how that can potentially have a very good impact on your recruiting incentives. 95% of the employees said they would be interested in working for an employer that provides for earned wage access. 89% of employees would be willing to work longer at an employer that in fact is offering earned wage access. And 79% of the employees would be willing to switch to an employer that offers earned wage access. So in fact, if you are that logistics entity that is working in the same commerce center with others that offer earned wage access and you do not, you could be at risk. And that really correlates to any employer today. One of the things that Frank mentioned in his earlier discussion was what he called the gig worker, which is the person that can get a side hustle or a job right here on their device and be working this evening. One of the things that has impacted the worker today is they recognize when they take that job that is via an app that they can get paid immediately. They go out, they work for the evening, and they get their money right away. So that experience has carried forward into the W-2 workforce. And we need to be able to give them a solution and that allows them to access pay that they've already earned. And that is what earned wage access is really about. So let's go ahead and talk about what is the key drivers of that employee stress. And Frank, do you want to address this particular slide? And also just to I know there was a question that came up is, will these slides be available in HR.com? Yes, they will be available. Go ahead, Frank.
Yeah, so again, the key drivers of stress, right? 72% of the employees are stressed financially. In the biggest drivers, so of that employees with stress, 79% are worried about rising inflation. And again, that's driven home in the videos with, quite a few people talking about the rising costs and the heating oil being, kind of the most egregious of those from just the recent craziness with our fuel prices. But inflation is real. It's not slowing down. The interest rates have been hammered up 5 times, and it's really not having enough impact yet. And hopefully it slows down before we hit a recession. But that's kind of the next big shoe to drop if they don't get it under control. 59% worried about retirement planning. Most have little to no retirement plan other than Social Security, and as we all know, that's not enough to live on, for the remainder of your non-working life. So supplemental retirement is really important. And again, when you're worried about paying next week's bill, you're not really thinking long-term, you're thinking about next week and last week. So again, having a solution to that really helps people start to look forward and focus forward. And then 56% worried about a market volatility and emergency savings. And again, that kind of goes to the looming fear of a recession, given the inflation and the crazy financial picture in today's marketplace.
So Frank, thank you for that. And let me answer a question came in from Robert. And Robert asked us, how does your earned wage access encourage savings? Great question. And really what it does is it encourages the individuals to take advantage of the best solution to pay their particular bill. First off, it encourages savings by making sure that they don't dig themselves deeper into a financial hole with either late fees, bounce checks, etc., whatever that might be. The other factor that it encourages savings is, like I said, on that app that is part of the Rapid Pay app, is where it's bringing earned wage access and pay card and financial wellness and cashback rewards all together in one place. Having the ability to simply elect for financial wellness right within the app, and for you to sign up for that individual coaching and budgeting, and again, that is a free benefit that you're able to take advantage of in order to work out your budgeting plan and encourage that savings. But the biggest factor is not getting yourself into, for paying, let's say it's your internet bill that might be $26 a month, and it is due today, but you do not get paid until Friday. So allowing you to access wages that you've already earned to pay that $26 bill today, rather than putting it on a credit card or letting that late fee happen and getting you deeper into that cycle, is how we encourage savings. And that is why waiting for funds isn't an option. We have regularly heard from HR, employers, et cetera, as well, why don't we just tell them, just wait until Friday? Well, if I'm worried about my power being shut off, I have to solve that problem. And what we don't want the employee to do in order to pay that utility bill is go to a check casher and get themselves into a cycle where they have to keep trying to stay ahead of that fee or that collection. What you're talking about for earned wage access is something that they can access for as little as $3. And also Frank talked about the fee cap that is critical, so they're not keep building that snowball bigger of fees that they might have. And that is a critical component of when you're doing your due diligence, that that you follow up. Is there a fee cap involved? And Frank's going to talk about that a little bit more as we get into regulation, which is upcoming. So let's talk about our next poll, and what it is that users want with all things related to their monies. Is all of us want faster payments because the need for frivolous timing needs to be flexible. Users want faster payments because the need is frivolous and the timing is flexible. Actually, I misread the question. Users want faster payments because the need is frivolous and the timing is flexible. What would the answer be? Your choices are true, false, or maybe. And Frank, are these frivolous as far as the timing, and the timing being, first off, are they frivolous payments, and is the timing flexible?
Well, we'll give a few more seconds, but it's an interesting answer. For the large majority, the expenses are taking care of, basic necessities: food, gas, paying their bills. Again, but and that's the majority of the adult market, I'll call it. But if you look at the Venmo crowd, old guys like myself think that's frivolous, but that's their lifestyle, right? It's a lifestyle. It's a financial lifestyle. They transact. They send money to their friend. They split the cab. They split their dinner. So it is, I think the answer is false, but there is a bit of a maybe in there when you look at that secondary use case.
Well, I think you hit it all. A bit of the maybe, a bit of the generational, but in fact, the answer is false. Is that it's not really frivolous. The timing is not flexible because the bill is due when the bill is due, and my pay has already been earned, and all I want to do is be able to access my pay in order to pay that bill and not get myself into a deeper hole. So thank you for that. And let's go ahead and move forward to the next slide, if I can. I'm a little locked up here, so there we go. Why will your employees use this benefit? And that's what we're going to talk about today. And also touching on one of the biggest fears that many of the HR professionals talk about today is that I don't want to make things worse. And we don't either. In fact, we want to make things better. So let's talk about how employees are paying their unexpected expense or their bills today if earned wage access is not available. Well, you have different types of individuals that responded to this American Banker survey with, you know, the demographics were white being in the blue, black being in the teal, and Hispanic being in the black bar. But you have, you know, many of us from 29% on the Hispanic side to 54% paying with a credit card. If the credit card is available, that's a problem. It may not be available or the balance may be too high. Borrowed from family and friends. That, as we all know, can only last for so long before you don't have that avenue to turn from. And that's been roughly between 36 and 39% across the board. Delaying the payment, which is going to be incurring late fees, digging the hole deeper. You have 24 to 29% of the respondents. Being able to sell something. Historically, that would mean going to a pawn shop, et cetera. Today, a little bit easier with all the technology online, eBay, those types of things. But you have 13% to 21% that'll take advantage of that. The really dangerous parts are these next two, which is taking a payday loan or bouncing the check. But all of these incur typically greater fees or greater personal risk than just simply being able to access wages that I've already earned. So let's talk about how it's being used, because that's what most of you are asking us, is I'm worried about what it's being used for. And earned wage access is being used primarily for helping pay the rent and mortgage on time, helping with cash flow, which oftentimes means I got to buy baby formula today and I can't wait till Friday. So I'll go ahead and access some monies, paying that bill that's due today, such as my power bill or utility bill before Friday, an unexpected bill, which could be an emergency or in fact a general purchase. But most of them are being used for a very, very good reason. And you can see it goes all the way from the low to moderate income to those making more than six figures. So where do your employees want to go for their money? Where do they want their money to go, which is a critical component of, they actually want choice. And choice is the biggest difference about the benefit that we're talking about bringing to you with earned wage access today. Not all earned wage access providers are equivalent. Many of them force a payment to one particular payout method or two. The critical component, so they may take a card that they will call a pay card that may or may not be a pay card, as a matter of fact. It could be very similar in the aspects of there's a fee to get all monies off of that card. In our case, we are a true pay card, which means there's 5 ways to get your money off of the card for free. But even if we were to give the pay card for free as a free method of delivery, we still are seeing a very large number of our on-demand payouts accepting their or wanting their payment to go to their bank account, their debit card of their choice. So this is going to some other pay card, some other debit card, which could be your TD Bank, your Bank of America, your Wells Fargo, et cetera. Or it could be going to your local credit union, those types of things, and happening instantly. And 86% of the users want the monies to go to the account that they are using for that particular transaction. That is also a critical difference about the service that we're offering, is that you don't set it up and it has to go to one avenue every single time. I could choose to do an earned wage access transaction this morning and have it go to my TD bank account. I could choose to do one this afternoon and have it go to my pay card. I could choose to do it this evening and do cash pickup. So choice is critical to regulation as we go forward as well. What is the employee on the final poll question 3? What employee payout channel is the most frequently used? Frank, do you have any input on or discussion points related to where people are going to go? You know, my biggest concern being a pay card provider for 20 plus years is that if I offer it free to the pay card, you know, everybody's going to go to pay card.
Yeah, so we actually thought that about 10 years ago, and that was our only option in the beginning. And the cool thing about pay card is it's immediately available. So, you know, one of the things that Brian just touched on was, you know, the employees want to go to their account of choice, right? And 86% of the transactions go to the existing card or debit card to the employee's checking account. And the reason for that, even though they could have a free transaction to the pay card, the reason they choose to pay, and the fee is generally in the neighborhood of $3, right, for the transaction, very similar to an ATM. And the reason they do that is they need the money in their primary account to pay their bills. Right. Again, back to these are not frivolous. It's not, you know, getting a pizza and a beer on Tuesday night with my friend. It's to pay my bills. And when I need the money to pay my bills, number one, I need it now, not in 2 days. So ACH is very, very small. It's that instant transfer. And the two ways that occur are one, through straight to the pay card, and two, straight to the employee's checking account through their debit card. So a huge majority are straight to the account of choice, the existing checking account, and then the lion's share of the remainder is through the free transaction to the pay card.
So the correct answer is B, an employee-owned debit card, and that is the one that is being utilized the most, because exactly what you discussed is the fact that people, when they need it, they need it now, and they need it where they have to use it now, which is typically to the account. If it's my spouse, I need it to go to the bank account or debit card that she is going to be using right now within minutes. If it's me, I may need it to go to my pay card that I have. ACH can be an option, but it is oftentimes too slow. And if ACH would work, they would just wait for payday. But thank you for that. Let's go ahead.
Brian, one point I wanted to make before we leave this particular topic is the free to pay card transaction. It looks good on the surface, right? But what happens on the back end when that's the only option they have is they get charged a fee to transfer the money from that pay card to their checking account. So the free to card gets the money halfway to where they need it, and then they pay the fee to get the money where they need it. And I just wanted to make sure to kind of point that out.
Thank you, Frank. Appreciate that. In our 8 minutes that we have left, Frank, we need to talk about something that's probably really important to everybody else on the call here today, which is, what about regulation? And first off, I want to just touch on, and Frank talked about it in his opening, is that Frank and FlexWage is the holder of the patent for earned wage access. And what it really covers is the embodiments of the on-demand payroll service, offering users an array of financial tools, enabling them to conduct a variety of financial transactions with great efficiency and cost savings. And we at Rapid are proud to have an exclusive patent access with FlexWage, and that becomes critical as we address the regulatory environment. I'm going to go ahead and click through all of these, Frank, so that we can look at them all collectively. But
Perfect.
First, you're going to touch on the Consumer Financial Protection Bureau, which is the CFPB, and how regulations are impacted. Then also Fair Labor Standards Act, and the U.S. state and Department of Labor regulations, regularly known as DOL, and federal and state financing laws, as well as the state money transmitting license requirements. Wow, that's 5 different regulatory bodies. How do all of them come together under this particular simple offering of earned wage access?
Yeah, so kind of back to that last slide, we hold the patent for utilizing payroll and time and labor data to make interim wages available to employees. And the method that we created for this, and again, this was in 2010, back before there was an acronym EWA or anybody heard of earned wage access. So this was kind of the tip of a spear a long time ago. But what we did, because I have a large, many years of banking and payments experience, so I had a very unique visibility to all of these regulatory hurdles, and we really threaded the needle between all of these to make a product that we believe is going to be the most long-term sustainable and compliant process, and that is why Rapid partnered with us when they wanted to build out the earned wage access program. So there's 5 different agencies that eventually will be concerned with earned wage access, and many are beginning to get deeper and deeper into creating regulations and so forth. But number one is the CFPB, the Consumer Financial Protection Bureau, right? That's the national or federal agency that was developed to look after the consumers from a financial perspective. We've been engaged with them for over 11 years, and their guidance from a couple of years ago was very specific about what an earned wage access program needed to deliver and how it needed to function for the federal government not to consider them as a lender, right? And if you're a lender, you need to be licensed in every state you do business. Earned wage access, if you're not a lender, you have no licensing from a lending perspective, but we'll get to states in a second here.
So Frank, we only have 6 minutes left,
okay.
And we have a hard stop. So I'm going to cut to a question that we really quickly had, and you talked about and if everybody were to pay attention to this deck when they get it, is look at the orange letters and the green letters, which really tie how those all come together. But I'm going to go ahead and move on and just touch on, can you quickly talk about the IRS, and what about the IRS? Because that was not one of the agencies that we touched on. And then we have just very quickly 2 more slides that get to another question that we had is, how hard is this to do? It's very simple, and I want to be able to show our audience how simple it is. Can you quickly give us a 30-second answer on the IRS?
Yeah, so the IRS, the question is constructive receipt. Is there a need to report and withhold and report taxes when an employee does an on-demand pay? And there is no requirement for that. If you look at employee payments in the restaurant industry of tips, right? They get paid every day, and it's accumulated and taken into account for their paycheck on their pay cycle. So right now, there is no regulation that says a payment of an earned wage access requires a withholding event and a constructive receipt. There may or may not be something of that nature, but right now, the only thing that's spoken to it is they call the Green Book, the IRS Green Book, and that's like their forward-looking things they want to consider in the future. The statement in there said that they might consider that employees with earned wage access would be considered weekly pay. That's kind of worst case scenario. But we believe that by the time that gets to any kind of a regulatory body, they will agree and work with it as every other week pay, just like it is today. So I'll try to cut that short.
Oh, thank you. The critical factor that you have with how hard is this? It's very easy. It what we're providing for you is responsible access to those earned wage access. Critical to the patent is the accurate calculations, which is due to the interfaces with payroll, time, and labor. You can set this up once. We help you set it up and forget about it, or you can be as interactive with it as you'd like. It is adaptable. It allows you to adjust to that need, to that one hiring location. Your staff will not be burdened. It is done in real time via the mobile app, web, telephone, or your device right here. We are compliant. That is what we discussed with the IRS, the CFPB, the OCC, the NEC, US Treasury, and the California Department of Financial Protection and Innovation. But most importantly, very, very easy solution. And also, I just wanted to touch on really quickly with our final 2 minutes is, what about the banking industry? We've had a whole bunch of questions in today's banking world with banks going under, Silicon Valley Bank going under. What about this going forward? Well, we at Green Dot are our own bank, and it is a bank that can be trusted. We are not like Silvergate Bank, Silicon Valley Bank, Signature Bank, or the others that have had problems. Total assets are $3.9 billion. We have a tremendous balance sheet and also are not going to get ourselves in any trouble like those others, where we have 93% of total deposits are protected. And you can see our 93% of those others that went under were unprotected, and that caused their problem. In the case of Green Dot Bank, we are protected with 84 million, 2% of our deposits are in great shape. So your keys to how do you follow up and what are the takeaways is that, first off, we're funded through and by the employer. The earned wage access data accuracy is critical, and transparent and capped fees is something that you should be looking for in your due diligence. And payroll deduction for reclaiming paid wages should be printed on every single pay stub, and you should not have to send monies to some third party. And instant funding due to the employee's account of choice is also a critical factor in going forward. We wanted to, I believe I answered some of the questions or most of the questions as we were going through, but one final question, Frank, is collection of payroll taxes on funds received by the employee. How is that done? And we have 30 seconds.
Brian, I'm sorry. I'm
we're
sorry to
done.
interrupt. Yeah, we are 2 minutes over. Sorry.
No worries.
So sorry to interrupt, but I'd like to thank you both for and everyone else for joining us today. If you'd like to view this webcast again, the archive recording will be available on the HR.com website within 24 hours. Your feedback is important to us. Please take a moment to fill out the exit survey that opened in a new browser page on your computer. This concludes our webcast. Enjoy the rest of your day.